So hi guys, this is Chetan Putar back again, and today I'm going to be talking to you about the different styles of trading. I have been always been asked as to what kind of trading system that you need to develop and what kind of trading which needs to be done. So I'm going to talk to you about that. There are different types of trading which is available. So there is something which is called as intraday trading or day trading. Intraday trading or day trading basically means that you buy and sell the stock on the same day, and essentially you need to close a position on the same day itself, so that which means intraday trading, in intraday trading you would probably take about 8 or 9 different trades on that particular day, or maybe you could take 1 or 2 trades, which means if you want to be trading intraday, then what you need to do is you have to look at a 1 day or 2 days chart, and the candles which you are going to be using is going to be either 2 minutes or 5 minutes or 10 minutes or 20 minutes. Yeah. So if you're using the 20 minutes candle, then obviously you're going to take a trade for about 2 hours or so. So that's intraday trading. So essentially intraday trading is a type of trading where you open the positions on the same day and you close the positions by evening. The great part about this kind of trading is that you don't have any risk, overnight risk. You don't need to carry the risk around with you. Then there is a different type of trading which I usually use, and it's called as a swing trading. According to me, swing trading is one of the most brilliant ways of trading, because you get to catch the swings of the market and you only trade. So you basically mitigate the risk by lowering the risk of the stocks going against you. So you are getting into the trade only when the market goes in your direction. Swing trading is a type of trading where you hold the positions for 4 or 5 days, which means what you are going to do is you are going to look at a 2 months or 3 months chart with a daily candlestick, and or a 4 hour candlestick. So a 3-month chart, a daily candlestick, or 3-month chart, 4-hour candlesticks, and you're going to be take positions into the market depending on which way the market starts moving, right? So typically swing trading would be a type of trading where you put alarms. So as the alarms start getting triggered out, you are going to be buying into the market or you're going to be selling into the market. Obviously if you're going to do short selling, then short selling would be only for a day or so. So avoid trying short selling into as a swing trader, but you could be able to do long positions. So the way you have to go about doing it is that as the market starts trending in your direction, which is essentially a long market, you're only going long, and because you're only going long, you could hold on the position for longer time if the market goes against you. So the way you go about doing it is that you put alarms as the trade starts, as you start getting what is called as a retracement into the market, or momentum into a market, or a breakout into the market. Enter the market and start planning your entries and exits depending on what kind of trade you are having. Yeah, so that's what is called as a swing trade. Then there is something which is called also as a positional trade. Now what positional trade basically means that you buy a stock and you hold on for about 1 or 2 months. Now the easiest way to do it is that you at least you look at a 6-month chart to about 9-month chart and enter the markets at retracement or at breakouts or at momentum, depending whether you're taking a day candle or you could use a weekly candle. Now a weekly candle is a brilliant idea to use, because for one reason that weekly candles don't lie. The emotions kind of get dissipated when you are looking at a weekly candle. So the great idea is to trade a weekly candle and hold on to the positions for about 2 to 6 weeks. Then there is a last type of trading which is called as momentum trading. Momentum trading is that you are getting into the position for anywhere between let's say 5 days to about 20 days. Yeah, again you are going to be using what is called as daily candles and about 2 to 3 months chart with a daily candle into it, and exiting the positions after the moment you achieve a time target of about 2 or 3 weeks. Yeah, so there is day trading, which is very quick buying and selling on the same day. You could be trading into futures and options if you know how to trade. Then there is something which is called as swing trading, which is something which I do. There is something which is called as momentum trading, which is about 4 to 6 weeks, and then there is finally which is called as positional trading. Or what you could do is you could do a blend of this, which means there are some of the trades which could be swing trades, some of them could be positional trades, some of them could be momentum trades. The swing trade could move to become a positional trade or a momentum trade if the market is going in your direction, so you don't really have to exit but what you do have to do is we have to put up trading stop losses. So the moment you are achieving a target on a swing trade and you think that the price is going to move in your direction beyond that, you could just move your price stop losses and move that swing trade into a momentum trade or a positional trade. So what I would suggest is, all this depends on the kind of personality which you have, all this depends on the kind of lifestyle which you have, all this depends on the kind of time which you have. Somebody who's working as a professional and who cannot be in the market all the time cannot be doing day trading, so please don't do that. People who are working from 9 to 5 job and then also want to trade, the best and the ideal way of doing it is either do a swing trade or a momentum trade or a positional trade. So type of trading depends, one, on whether you have what kind of personality, which means if you have a hyper personality, if you are very quick in getting in and out, then day trading is good for you. But if you are more relaxed, if you are you can take some time off for yourself, then swing trade or positional trade or momentum trade is a brilliant idea. So go try doing that, figure out what your personality is, find out what matches your personality, and experiment, because that is the only time you will be able to know about it, right? So thanks guys, thanks for listening to me. This is an exclusive material for IMS, and please do not share it outside the group, and I'll try to make some more videos. Thanks and bye.